Well, folks, if you're tuning in with us right now, you're joining us at a pretty fascinating moment. We just wrapped up a week in the markets that, well, let's just say it had its fair share of ups and downs. As March comes to a close, we're staring down a brand new week starting April 1st. And by the looks of it, it could be a week full of some pretty big market movers.
Yeah, no doubt about it. You've pulled together actually a very comprehensive set of recent market previews and economic calendar. So, what we're going to do is try to really boil it all down for you. We want to make sure you have a crystal clear picture of the major economic and market events coming up this week. But we don't want to bog you down with all the little details, right? We want to make sure you really understand the big things that actually matter.
Exactly. So let's start by, let's sort of take stock of the wild ride we just had. The week of March 24th through the 30th, it definitely felt volatile out there. But it wasn't just a feeling, right? The data backs it up.
Oh, absolutely. The sources we've looked at show a market that's trying to find its footing in what's become a very, very complex environment. Yeah, there are some geopolitical things happening, but it really seems like it's the economic data that's been stirring up most of that volatility.
For sure. And if we look at specifics, U.S. equities definitely took a hit. I mean, the S&P 500 ended the week down significantly, having its worst month since way back in September 2023. And the NASDAQ, which, as most of you know, is often seen as a bellwether for the tech sector, well, it fell even harder. That seems like a pretty clear sign that investors are getting more cautious.
It does. And if you look at the sources, the two things that keep popping up are, well, they're the usual suspects, really. Persistent inflation and those escalating trade tensions. Those two factors seem to be weighing especially heavy on sentiment in the tech world, leading to a lot of unease.
And it wasn't just sentiment that took a hit. The actual economic numbers that came out weren't exactly encouraging either. The final reading for Q4 GDP was revised downwards, showing slower growth than initially estimated. I think it settled at 2.4%.
Right. And that downward revision, well, it suggests a cooling in economic activity. Now, slower growth isn't always a bad thing, but it does add another layer of complexity to the inflation picture.
Because at the same time, inflation doesn't seem to be fading away as quickly as we might have hoped. February's core PCE, that's the Personal Consumption Expenditures Price Index, excluding food and energy, it came in hotter than expected at 2.8%. It's the key inflation gauge the Fed keeps its eye on, right? So basically, what we have is slowing growth, but with sticky inflation. That's a tough spot for policymakers to be in.
It really is. They're walking a tightrope. And the data also showed something interesting about consumer behavior. Personal income actually grew, which is usually a good sign, but consumer spending was surprisingly weak. This raises some big questions about how strong consumer demand will be moving forward.
And then, on top of all that, we've got the uncertainty coming from trade policy. President Trump's announcement about those upcoming auto tariffs, well, that sent shockwaves through the markets midweek, triggering some pretty serious sell-offs. And we know there's more tariff news coming down the pike pretty soon.
You're right. The markets are on edge, waiting for those additional tariff announcements expected on April 2nd. It's really stirred up those worries about a potential trade war, hasn't it? The market tends to freak out a little bit when things are uncertain, especially when it comes to global trade. The prospect of disruptions to global supply chains and higher costs for businesses and consumers, well, historically, that hasn't been a good recipe for the markets.
And it wasn't just a U.S. story either. The effects were felt globally. European markets faced some downward pressure, and even the European Central Bank came out and issued warnings about those tariffs. Asia was a bit more mixed, but that early optimism we saw around artificial intelligence seemed to lose a little steam as the week went on.
Yeah, it shows how interconnected everything is. Especially when trade is on the line. When a big player like the ECB starts sounding the alarm, the markets around the world definitely take notice.
Right. Now, over in commodities, gold held strong. It seems like it's still that go-to safe haven asset in times of uncertainty, especially with inflation looming. Oil prices got a boost too, apparently because of a sharp drop in those crude oil inventories.
Yep. Gold is always a popular choice when things get rocky, whether it's the economy or geopolitics. And that unexpected dip in oil inventories, well, it suggests there might be some shifts happening in the supply and demand dynamics in the energy sector. Always something to watch.
Okay, so that's the quick rundown of the past week. We saw growth slowing down, inflation hanging around, and rising trade tensions, all of which threw some serious volatility into the mix. Now let's shift gears and look ahead. The week of March 31st to April 4th. It sounds like we're in for a deluge of U.S. economic data.
Oh yeah, it's going to be a busy one. We've got 3 big U.S. economic reports coming out, and they should give us a much clearer picture of where the economy stands right now. First up, we've got the ISM Manufacturing PMI on April 1st.
Right, the Institute for Supply Management's Purchasing Managers Index. Just in case anyone needs a refresher, this is a crucial indicator of how the manufacturing sector is doing. Generally, a reading above 50 means things are expanding, while a reading below 50 suggests contraction. And the forecast, I think, is pointing to further contraction, right?
Exactly. The forecast is sitting at 49.6. If that holds true, it would tell us that the manufacturing sector is still facing some headwinds, maybe due to softer demand or those ongoing supply chain issues we talked about. And, manufacturing is often a leading indicator. So if it dips below 50 and stays there for a while, that could be an early warning sign that the broader economy is weakening. It's definitely one that analysts will be watching very closely.
Then, hot on the heels of the PMI, we've got the ADP employment report coming out on April 2nd. Now, I know this isn't the official government jobs report, but it's often seen as a sort of sneak peek, giving us a hint of what might be coming. And the forecast, I believe, is for modest job growth.
That's right. The consensus estimate is for around 118,000 new jobs added in March. Now, keep in mind, this report is based on private payroll data, so it's not exactly the same as the official government numbers. But, sometimes this ADP report can give us a little clue about what direction the non-farm payrolls report might take.
And speaking of the non-farm payrolls report, that's scheduled for release on April 4th. It's arguably the main event of the week for the U.S. economy, and the expectation is for a slowdown in job creation compared to the previous month.
You got it. The current forecast is for 128,000 new jobs in March. That's down from February's numbers. This report carries a lot of weight because, the job market has been front and center for policymakers as they try to figure out if the economy is cooling down enough to get inflation under control. If we see a significant slowdown in job growth, that could really shake things up in the markets and might even influence what the Fed decides to do next. This report isn't just about jobs, it's about wages, inflation, and ultimately the Fed's interest rate decisions. So, kind of a big deal.
So we're potentially looking at a weakening manufacturing sector and a cooling labor market, all while inflation is proving to be a real tough nut to crack. It really highlights that tug of war between inflation and growth, doesn't it? This data could signal a shift in the economic winds, so for those of you out there who are closely following these markets, you might want to think about how this could affect your investment strategy moving forward.
You're absolutely right. The signals we're getting are sending a mixed message. And these upcoming data releases will be key in providing a clearer picture of where the U.S. economy is heading in the short term. So buckle up. It's going to be interesting.
It is, but it's not just about the economic numbers, is it? That April 2nd date keeps popping up everywhere. That's when President Trump is set to announce those new tariffs. It seems like this could be a real game changer that might overshadow everything else.
Yeah, this one has the potential to rock the boat. Investors around the world will be laser focused on the details, trying to understand which sectors and countries are being targeted and how big those tariffs will be. We could see immediate reactions in stock prices, currencies, and commodities. So definitely a big one to watch.
And it's not just about the announcement itself, right? What really worries me is the potential for retaliation from our major trading partners. It feels like we could be on a slippery slope toward a full-blown trade war.
It's a valid concern. Tariffs are rarely a one-way street. If the U.S. slaps tariffs on imports, it's pretty much guaranteed that those affected countries will retaliate with their own tariffs on American goods. It can turn into a vicious cycle of protectionism, which ends up hurting global trade flows, leading to higher prices for everyone around the world.
Turning our attention back to the global stage, we've got some key data coming out of the Eurozone and China as well. For the Eurozone, we're expecting final inflation numbers on April 3rd. How important are these, especially with those tariff concerns and the general slowdown in global growth we've been seeing?
Oh, those Eurozone inflation figures are going to be very closely watched, especially by the European Central Bank. They need to figure out their next move. If inflation stays stubbornly high, even with growth slowing down, the ECB will have a real dilemma on its hands. Do they fight inflation or try to prop up the economy? Especially with the added uncertainty from those potential tariffs impacting the region. It's going to be fascinating to see how they play their cards.
Right. And over in Asia, we're getting China's PMI data right at the start of the week on March 31st. China's economic performance is so vital for the global economy, especially when it comes to those supply chains. What should we be focusing on in those numbers?
Well, keep an eye on the National Bureau of Statistics, NBS, PMI data out of China. It will give us a glimpse into how their manufacturing sector is doing. A strong reading would suggest that China's recovery is gaining traction, which could boost global demand and help smooth out those supply chain kinks. But if it comes in weaker than expected, it might raise some red flags about global growth prospects.
And let's not forget about Brazil. It looks like they have a bunch of economic data coming out throughout the week, including numbers on industrial production and their trade balance. Definitely something for anyone interested in Latin American markets to pay attention to.
Yep. Brazil's economic data can tell us a lot about what's happening in Latin America more broadly. It's important for investors and businesses who are active in those markets to stay informed.
Okay, last but not least, let's look at the corporate world. Sounds like it's going to be a fairly quiet week for earnings announcements. We're in that lull before the first quarter earnings season really kicks off. But even with a lighter schedule, if any of the big companies come out with major news or updates, it could still move the needle for market sentiment, right?
Absolutely. Even a handful of key earnings releases or important announcements can give us a sneak peek into broader sector trends and influence how investors are feeling about the market as a whole. Remember, they're starting to form expectations for the next earnings season. So yeah, keep your ears open, even if it's a bit quieter than usual.
Okay, so taking a step back and looking at the big picture for the week ahead, it really does feel like we're heading into a period of heightened uncertainty, doesn't it? We've got the typical end-of-quarter portfolio adjustments that tend to happen, plus all these potentially market-moving data releases and policy announcements. It just seems like increased volatility is almost inevitable.
I'd say that's a very accurate assessment. You've got all these factors converging: critical economic data, big decisions on trade policy, and important global economic indicators all coming together. It's a recipe for potential ups and downs across the board. So yeah, investors should be prepared for some possible volatility.
And that constant tension between inflation and economic growth, it's not going away anytime soon, is it? The prospect of high inflation sticking around while the economy slows down, well, that raises those scary stagflation alarms, and it makes the job of those central bankers a whole lot harder.
You're right, it's a tricky situation. Trying to navigate an economic environment where you've got both high inflation and slowing growth, well, that requires a very delicate touch. Central banks all over the world will be glued to these upcoming data releases as they try to figure out what to do next with monetary policy. The risk of stagflation, that's when you have slow growth coupled with high inflation, is a real concern right now.
But it feels like the thing that's really going to drive things this week is what happens with trade policy. President Trump's announcement on April 2nd, that feels like it has the potential to really dictate whether investors are feeling bullish or bearish. It could influence how much risk they're willing to take on, whether it's in stocks, currencies, or commodities.
Couldn't have said it better myself. The uncertainty swirling around trade policy and the potential for a trade war, well, that's likely to be the dominant theme of the week. Investors will be watching very closely for any clues about how big these new tariffs might be, who they'll target, and how likely it is that we'll see retaliation from our trading partners.
Right. So it's going to be a week jam-packed with potential market-moving events, with those tariff announcements and the U.S. jobs data taking center stage. And all of this is happening against a backdrop of an economy that seems to be losing steam and inflation that just won't quit. It's a lot to digest.
It is a lot to take in. But understanding how all these pieces fit together is crucial if you want to make sense of what's happening in the economy right now. The interplay between inflation, growth, and trade policy is going to be hugely important for markets in the coming weeks and months.
So here's something for you to think about as we wrap up. How do you think these upcoming events, both individually and collectively, will shape the economic landscape for the rest of spring 2025? What kind of ripple effects might we see across different sectors and markets? And most importantly, how does this complex interplay of inflation, growth, and trade influence your outlook on the markets? Think about that as we move forward.